Hello, guys. Welcome to topic two of our course. Today, we'll be taking a look at those who make money from crypto. In our previous class, we talked about the general introduction to cryptocurrency. We attempted, various definitions, and we tried to clarify various terms associated with crypto. If you missed that class and you're seeing this video on Facebook, well, kindly check the comment section and you'll find the various links where you could get access to the previous presentations. Today, we'll be taking a look at the three types of people who make money from cryptocurrency. Now, the first type, we have the investors, we have the traders, and lastly, we have the gamblers. Well, that term gambler, I kind of coined it. It might not really be a perfect definition of what I might be explaining there. Well, first of all, let us take a look at the investors. Now, a crypto investor, like every other investor, is somebody who goes into the market to search for a coin that has potential value. You get to the point. He buys this coin or coins, as the case may be, as an asset or assets, and he holds them for a very long time till when the value appreciates. Then he goes further to sell it and take profit on his investment. Now, this is just like every form of investor. So, one who is in real estate would actually go out, look for a good property, right? He purchases it down and hoping that it appreciates in value and he or she will sell that off. Same thing applies to a crypto investor. Now, basically, there are three types of investor. We have the short-term investor. Well, these are people who probably they just buy for short term, and let's say 6 months, 1 year, or 18 months, or 2 years, thereabouts. And after they have gotten to a large extent a certain percentage profit they have, or which they are hoping to get from that coin. Once they have that desired percentage, they sell that coin off. Now, the medium term investors, unlike the short term investors, they hold for a longer time. Well, we could say 2 years, 3 years, or 4 years, maybe. Well, there's no hard and fast rule actually about how to differentiate a short, medium, or long term investor. Well, these are just terminologies though. But they hold a little bit longer than a short term investor, pending when it reaches the desired profit they want to take. While the long-term investors are people who hold cryptocurrency for a very long time. Now you can bring your mind back to those who bought Bitcoin as early as 2010, 2011, and up till 2021, like 11, 12 years later, they are still holding these coins. These are long-term investors. Don't mind me that I stressed the long, right? But they're really long-term investors, okay? Now, the second type of people who make money from cryptocurrency are traders. Now, these traders, just like every form of enterprise or business or marketing, the idea or the goal is to buy low, right, and to sell high. Now, traders are investors or are people who buy cryptocurrency, and wish to make profit from it. Now, they're not really bothered about holding these coins for long. They are just about entering the market at a low point and selling it off as a high point. Now, remember when we talked in chapter one about volatility, we said volatility is necessary for any form of marketing because if the price doesn't go down, then definitely if a market is not volatile, actually, you won't lose money, but you won't also make money because the price will just be static. So volatility also helps to add spice to the market. So these kind of people, they enjoy from the volatility of the market. They buy low and they sell high. Now, there are different types of traders. I categorize them into four. We have the daily traders, we have the weekly traders, monthly, and spontaneous traders. Now, they can easily be understood just by by the way they are labeled. Daily traders, these people are more interested in a 24-hour graph, meaning they are so much focused on what is the lowest point of the market between now and the last 24 hours, and where can the highest point get to within the next 24 hours. So these guys are just so interested in getting into the market and getting off within the next 24 hours. And they also calculate their profits based on that time frame. Now, let me give you a pure practical example. So let's say I want to go to Binance now as a day trader. So let's say I want to trade Bitcoin versus BUSD. So this is me as a day trader. Now, as a day trader, I need to know how this market has been faring within the last 24 hours. So I'll be more interested in, okay, let me just get my pen, in possibly a 5 minute graph, a 3 minutes, or a 1 minute graph, meaning I want to see the market clearly. So let's imagine I want to use a 5 minute candlestick, like I want to see this market from a 5 minutes point. Now take note of the time frames here. This is 31st of July 2021. This was as at 10:10 a.m. and this is 11:20 a.m. and down to the present time. So you can see this market here is just between an hour or two. That's because I'm using a 5 minutes candlestick. So I want to see this market closely. So with this, I can even expand. Okay, I can expand the market more and view the market minute by minute by minute. It gets the point. I can also close it and also view it from a larger perspective. Now, I'm really interested in knowing where this market, or what this market has been doing within the last 24 hours. So if I want to check within the last 24 hours, this is like 12:07 p.m. as at the time of recording. So I would have to go back to yesterday, same time yesterday, which is more like 24 hours ago. So you can see this was around 11 or 12. So we are talking, we'll be looking at this point from here, which is about this time yesterday, and we're more interested from this place forward to this place. This is the place that would interest me most in the market, since I'm using I'm a daily trader. I don't know if you get the practical example. So let's come back to our presentation. Now, the weekly trader is more interested in understanding the market from a weekly perspective, knowing when to get into the market and when to get out into the market. And these kind of people, they don't mind. Even if it's one successful trade, two successful trades, or three successful trades they make in a week, they are very happy. But these kind of people, most times they use bulk. So just that one or two or three successful trades would earn enough profit if well calculated. So unlike the daily traders, these guys will not be too bothered about the 5 minutes time frame. However, they might be concerned with maybe the 2 hour, 4 hour, or the daily candlestick. So better understand the market from a wider time frame. So let's imagine you want to use the 2 hour candlestick. So you discover the market is from a wider perspective now. And we can look at the market today. This is from 26th, just between here and here. This is from the 23rd. So this is 23rd to today. So from this point, it's like a week ago. So they like expanded the market now using a 2 hour candlestick. So once they expand it now, they can now say, okay, this is what the market has been doing within the last week. So you can see, very easy to analyze. That is a weekly trader. Then same thing applies as the name monthly trader goes. This kind of people, they are interested in trading monthly. Like they're not really bothered, just like a weekly trader. If they are able to make few trades in a month, they're okay, good, and fine. Then the last part is the spontaneous trader. Now, the spontaneous trader actually, many newbies, many of us fall into this point. I think I'm also a spontaneous trader. Well, this kind of people don't really, trade with any form of time frame. All that happens is they enter the market, just like action film, like, wow, Bitcoin is down, let us buy. So let's say, for example, they enter into the market on this particular day when Bitcoin was like 29K. They just observe like, wow, Bitcoin has fallen. Oh yeah, London Bridge has fallen. Let us take advantage of it. And good and fine, they take advantage of it. And they wake up one morning and Bitcoin is now $41,000. Beautiful, we have made profit. Let us sell. So they sell off today, hoping it comes down. So these kind of people, basically, they just trade with emotions, no form of technical analysis. Well, good and fine, they are still making their money, right? So these are spontaneous traders, kind of. Then we now have the other type. This is called gambling. Well, this might not really be the right name for this kind of people, though, but I just had to give that. Now, this kind of people are more interested in shit coins. Now, what's the whole idea of shit coin? Shit coin is, when someone tells you, okay, buy this coin, it's less than a cent, in fact, it's like 0 point something cents. So in the next few months, it has not hit any of the main exchange, it has not been listed. So just buy it down, and by the time it enters $1, trust me, you'll be a millionaire. So imagine a coin that is just some coin that 1,000 naira can give you 4 million pieces of that coin. So they'll tell you, with just this 1,000 naira, with just this 2,000 naira, you're getting 4 million pieces of this coin. So imagine if each of this coin enters 1 naira, that's like 4 million naira. And imagine if any of this coin enters $1, that's like $4 million. This is what we refer to as shit coins. You understand? There are so many of them. Now, not as if this shit coin, not every shit coin is actually bad, but the problem with shit coins, most of these coins do not have value in themselves. But they don't have any serious projects surrounding them. So they are basically community driven. People, advertise them up, down, front, left, right, center. So many people enter this kind of coins. Now, let me give you a graph to tell you how people make money from this. So let's imagine the price of this shit coin is here, and the smart guys buy at this point, and these coins now start gaining momentum. So it starts rising because the law of demand and supply. So many people are demanding them. They are hyping the coin. They are hyping, and the fear of missing out, FOMO. Okay, let's start learning some terminologies. FOMO, fear of missing out, would make people start rushing. So it gets to the apex point. Woo la la! And some people will still be like, this coin is going to go to the moon, it's going to increase. Then all of a sudden, all those who bought here, especially the whales, by whales, I mean those who buy in bulk, they will now start selling off at this point, selling off. The price start crumbling. So those who bought also at this level too will be like, wow, this thing is falling. Let's quickly sell off. At least we'll make a profit from here to here. So these ones sell off at this point. It will lead to a greater fall in that price, right? And more sales, more sales. Since they don't have any real projects surrounding them, it's still going to come back to the same level at which you started. So the kind of people who enjoy this market are those who bought here and are able to sell on time or know when to sell, and they're selling at the right point. While those who would lose will be those who will now eventually enter the market here at this high point, right? With the hope that it will go higher to make profit, but all of a sudden it starts coming down. Do you get the point? And even when it comes down, most of them they'll be like, okay, it will still go up, it's normal. But since these coins don't really have value in themselves, man, you're just gonna rest here for a very long time. So you've lost your money, sorry. That is how shitcoin work. So you can actually make money from shitcoins, from gambling, okay? But just understand how it works. There's what you know would not kill you actually. So if you know this is what you're about entering, then it's okay, good and fine. So you might ask me, hey Alex, which one do you actually do? Well, actually, I am an investor, I'm a trader, and I can also be a gambler actually. So if for the sake of tutorials, you could come to my Trust wallet. You could see some coins I'm holding. Well, these are kind of veritable coins. You can see like these first four are really good coins. Refinable token, BSCS token, BNB. Actually, I'm staking my BNB. We'll talk about staking later. I'm staking some amount of Trons. I'm staking some amount of Kava on Trust Wallet. That is one. Then you could also see some shit coins here. For example, you could see this very stupid. Okay, sorry, not really stupid. You could see this Fox Finance, right? This is about 61 million pieces of this coin, and it is just worth $0.48. Well, I actually made my profit from it when the price actually went up. So this is just the remaining one I left in case it comes up again, right? But you can see what it's worth, so you can have a better idea. And this is also another coin, Space Koji. You can see Space Koji, yeah, 290 million pieces of this coin is just worth $0.49. This is an example of shitcoin. But there's one shitcoin I know I really enjoy. That's ASS, Australian Shepherd token. I think I just bought about 15 when it was still trending. I bought about $15 or $20 worth of this coin. I ended up making up to $600 from this particular coin because it rose to a very large. I bought 4 hours after it was listed on PancakeSwap. And 2 months later, just the $20 I bought went as high as $600, if I'm not mistaken. I took my profits, though I still left about 450 million pieces, just in case in the nearest future it has potential to grow again. Let's not just sell off everything. When I bought about billions just for $20, right? But this is the idea of gambling, okay? Well, I named it gambling because it's actually gambling. So we're done with topic 2, basically, and those who make money in crypto. Now we'll go to topic 3. Like I said in my former class, we'll be trying to mix at least two topics in a presentation to be able to cover up the syllabus within the weekend. Actually, if you're watching this at any other time, this is supposed to be a weekend course for the members of Power Team, those in the ROYALQ training group. So if you're saying this in any other platform, then you're opportuned to be a part of that or to benefit from this. So we'll go to topic 3. What is crypto trading? And why many newbies are not successful traders? Remember the question I asked sometime in my previous presentation, who has ever been burnt by crypto? Let me see if I can still locate this. So this is it. Have you ever gotten your hands burnt by crypto? Well, I guess this would be the reason why many of us have gotten our hands burnt by crypto, right? Now, first of all, what is crypto trading? Crypto trading is one of the main sources of getting profit from cryptocurrency. This type of online trading is almost the same as stocks, currencies, or commodities trading. The main task is to buy when the price is low and sell when the price is high. That's finished. That's just the whole idea of trading. Now, the biggest difference between crypto trading and another form of trading is high volatility. Now, crypto is highly volatile. Like, okay, let's come back to our Binance. You can see this kind of movement. Like, let me get my pen. From $29,000 to 41 or $42,000, though fluctuating in less than a week. It is in crypto, you can see this kind of crazy moves, okay? And since it's highly volatile, it's very, very possible for you to make cool cash. Also very possible for you to lose a whole lot of cash. So that is why you really need to know so many things. Now, as a crypto trader, the first thing you need to know is how. Now, many people enter crypto trading with total ignorance. Well, in as far as crypto could made simple, as we will see in the use of quantitative bots, but you still need to have at least an idea of crypto trading, at least just the barest minimum, know what you're doing. And that's what this course is aimed at. And there are 3 basic things you need to know. First is how to analyze coins. This is very important. You need to have an idea on how to analyze a coin, even if not in a vast way, but in the little way you can. Then the second one is how to use charts and quotations. Now, this is a chart, for example. At least with this chart, you can get to understand, okay, within a week, this is how the price of this coin has moved. You can get to understand how volatile this coin is from these various charts. At least even as simple as that knowledge, you should be able to implement it, even if you're not really interested in any rigorous knowledge of crypto, but have an idea of that. Then you should be able to open deals on exchanges. At least learn how to use Binance or Hobby or any other cool exchange. Well, for now, Binance is like the #1 crypto exchange in the world, and that's what I'm using. Also, we have other good exchanges like Hobby also. Then, having learned all these 3 things, at least, or having known you must learn all these 3 things, which would still cover, we should have an idea of some things. And what are these things? First of all, why many newcomers leave crypto with premium tiers, like on the sad note? You can see this guy, he's shocked. All right, now the first one is wrong orientation. For me, I feel every reason why many people fail in crypto is because of this wrong orientation, because it comes in different ways and guises. Now, the first one is when you take a look at many of the adverts on Facebook, on Instagram, everywhere that's talking about Forex or crypto, you would always see people coming out with testimony. Hey, I made 2 million naira overnight. They show you a nice house. When you look at IQ options adverts, so many of these funny adverts, both on crypto and Forex. You see guys who are very successful, and they tend to make it like crypto is so easy. It happened overnight. So everybody who is entering or who's going to download that trading application or is going to enters with that mindset. Well, it is actually possible. People have actually made money overnight. But it's not normal. Like, it's not a regular occurrence or something that you are 100% guaranteed. First of all, you need to know what you're doing first. You need to have capital to trade. Somebody who is trading $10,000 and you who just wants to start a crypto enterprise with $200, you guys won't earn the same thing, because it's open to opportunities to trade various coins, variety of coins and token. You are open to very limited opportunity. So always note that these adverts are contextual, and not everything that you see in advert is the real representation. That is the first one. So always, secondly, also learn to know that you need meaningful capital to trade. Now, I haven't said this. Another orientation or wrong orientation is this idea of Ponzi. Now, many Ponzi schemes have come out to use Forex and crypto as means to dupe people. So they tell you, invest with us, we trade for you. At the end of a month, we give you 80%, we give you 100%, right? And they give you the first month, they give you the second month, and the third month, they run away with everything. And you're like, hi, crypto is a scam, Forex is a scam. Forex is not a scam. Crypto is not a scam. It is you that was not wise and gave people your money to scam you. Okay. So this whole idea of Ponzi has affected in another way, because when many people now enter crypto, they are looking at making that same 100% of their capital in a month. And when it's not forthcoming, they are anxious. Their emotions are being toyed with. Like, their mindset is, as I'm entering crypto now, I'm making 70%. It's possible though. But also have the other side, you might not make that 70%. Depends on the way the market is moving. Then the second one is related to this, is impatience. Many people are not patient. Okay. So let's say you're buying Bitcoin now, that is $41,000. You are hopeful it's going to get to $50,000. You're going to make like 20-25% gain at that price. And eventually you now see the market falling down, and all of a sudden you now start selling off. Okay. Now, this would make, naturally you're going to make a loss, because the rule of any business is this. This is the idea of crypto generally. Okay. You're buying what? You're buying low. Let me get my pen. You're buying low. Okay, you're buying low here, and you're selling high. Anything other than that is a loss. So if you're going to be buying here and you're going to now sell here, then you're trading at a loss. And that will likely come as a result of what? Impatience. So this is also what really kills people. Then another aspect that really makes people lose is this whole idea of, okay, crypto is going up, Bitcoin is going up. When Bitcoin was in 29,000 as of last week, people were like, buy the dip, buy the dip. They were like, no, it will still go down. Many people did not buy. Now it's in $41,000. People are like, wow, Bitcoin is going up. This is where the fear of missing out is. This is now when people will be rushing it. So many people now go and borrow money. They will collect loans. They will sell their cars or properties with the hope of Bitcoin moved from 29 to 40. Shit, I missed that, which I had known. So I don't want to miss it the second time. You now sell your properties, right, to buy the Bitcoin. Eventually, I'm not saying anything, but let's now imagine Bitcoin next week starts falling back again. You've collected a loan and you've told the person, just give me 1 week or 2 weeks, 2 weeks at most, I'll pay you back. And that's when the price of Bitcoin starts falling. And you're like, damn, London Bridge is falling down. Okay, it starts falling down. And what now happens is you're now tempted, because it's almost time for you to pay back, right? You're like, wow. You now sell at a loss. You have already lost some percentages of what you invested in. You now end up borrowing more money to pay a money you had borrowed earlier. And you now start shouting, crypto is a scam, right? Crypto is not a scam. Or you're the one who was burned. You're burned by what? Cryptocurrency, okay? So this is what happened to you. Your hand was roasted because you were not patient, and you did not really think well before entering the market. So now we've looked at two topics today, which is why many newbies fail in cryptocurrency, and those who make money from cryptocurrency. So we'll now go back to look at, let's check our course outline, what we'll be looking at in topic 3, in topic 4 and topic 5. Topic 4 and topic 5 would be looking at things to consider before trading or investing in a coin, and major things that influence the price of the market. We'll take these two topics once, then before we now go to the basics on trading with bots. Because definitely before we talk about bots trading and crypto, we really need to know what crypto is all about and how to have the right mindsets to crypto. So once again, I'm Alex Etsy, and it's been a nice time, with you. Hope to see you at our next presentation.